Picture this. Two traders, same chart, same goal, more profit. One uses a spread-based broker, paying that small gap between the buy and sell price on every trade. The other uses a commission-based broker, enjoying tighter spreads but paying a fixed fee each time. So, which one is actually cheaper? Here's the secret. Lower spreads don't always mean lower costs. Spread-based models seem simple, but costs can skyrocket when the market gets volatile. Commission models feel more transparent, but those fixed fees add up fast if you trade frequently. So, stop asking which is cheaper and start asking which fits my trading style. If you're a long-term swing trader, a fair spread model might be your best bet. If you're a high-frequency scalper, low commissions could save you a fortune. Understanding your costs is as crucial as your strategy. If you want competitive spreads and transparent fees, check out Innohedge Limited. Compare the numbers yourself and find your true edge. Trade smart. Thanks for watching!